All right, some fresh new numbers from the Bureau of Economic Analysis, which sounds like a very fun place to work, I would imagine. But they have some good news. It shows the U.S. economy grew in the second quarter of this year.
The revised numbers show gross domestic product jumped by 3%. Corporate earnings increased to $57.6 billion. This as Freddie Mac is reporting that mortgage rates dropped even more this week to 6.35%. CBS News senior business and tech correspondent Jo Ling Kent joins us now from Los Angeles. So, Jo Ling, explain to us what these revised numbers say about the state of the U.S. economy, and should we continue to think that the Fed is going to cut interest rates then?
Well, firstly, I'd just like to say that the Bureau of Economic Analysis are a bunch of really smart people who put out great data for us. So I do love them. I'm sure it's really fun to work there.
They like to party. Oh, they like to party there at the Bureau of Economic Analysis.
They know more about the economy than we will know about the economy at this exact juncture. And they put out some new data today. Essentially, what we're seeing is things are going in the same direction that the Fed is looking for. So you can see that, if you take a look at the latest reading of GDP, it was up from that initial estimate of 2.8%. It was driven by good personal spending we see. We also saw, this is consumption, investment, areas like that. Nothing too off the charts, so to speak, but a good sign when it comes to looking at where the economy is right now, given the fact that we had, a jobs report last month that was pretty challenging and surprising to the market. And now as we look ahead to that critical Federal Reserve meeting in mid-September, when it comes to your interest rates, when it comes to those new car loans and mortgages and credit card debt.
And an open invite to anyone from the Bureau of Economic Analysis to join us on CBS News 24/7 anytime. We'll always take you. But Jo Ling, what's interesting is Redfin's reporting that despite a drop in mortgage rates, home sales have yet to improve. In fact, the company's reporting a nearly 7% drop in pending home sales this month. That's the biggest drop we've seen in nearly a year. What's up there?
People are holding off. And so what we see are a couple of different factors here. Even though mortgage rates are coming down, there's this sense that the Federal Reserve is very likely to cut the benchmark interest rate next month in mid-September, right? So you have some folks, a lot of people who are just sitting on the sidelines. They're still stressing and they're still waiting. So you have that reality. Then you also have the National Association of Realtors settlement that we've been covering as well. And if you look at that, it certainly is like putting some confusion into the market of like, how do I search for a home? Do I need to be signing paperwork with an agent, a realtor, and how that might be keeping people on the sidelines. So even though that mortgage rate continues to move down, it's a great sign, getting more people off the sidelines. You also have inventory that remains very tight in a lot of big cities. And so when you have inventory, not a lot of homes going up for sale, you have the golden handcuffs on a lot of boomers not letting go of those homes that so many people want to be buying, maybe starter homes as well, tight in the market. That all contributes to this. So it's all contingent on, what the confidence of the consumer is, the buyer, the person who wants to either sell that home or purchase that home. So there's been a lot going on in the real estate market that we're keeping an eye on. I have a feeling once we know come September 17th what Federal Reserve Chair Jerome Powell is going to announce when it comes to a rate cut, then you're going to see a lot more activity and people thinking, okay, this is the new reality that I'm dealing with. This is what I can afford to pay.
So is new activity better? Because we expect that the Fed's going to cut interest rates next month. That's just about in 2 weeks from now. 2.5 weeks, really. But we saw the housing market get a boost in the UK when they cut rates. So if you're looking to sell your home, should you wait until these interest rates actually come down? Or should you try and do it now when there's a dearth of supply so you can potentially get more for your home?
I think it really depends on where you live and what you need and what you're trying to get out of this situation. It's so situationally dependent, right? And I know that that's not a great answer, but basically when you look at what's happening in the market, this is the talk of the town, especially here in Los Angeles, places like the Bay Area in California and all across the country and cities I've been traveling to covering this issue. A lot of people deciding, okay, well, if rates come down, then maybe I can afford more. Maybe I have a better chance of getting more of what I want when it comes to that home situation, whether you're buying for the first time or you're selling. But at the same time, demand is likely to surge. I don't think that's an unfair assumption at this point. So if you take a look, we have had no changes. That chart is just really boring and tells you everything you need to know. And so it's flat line. So the question now is it a quarter point? Is it a half point? What we saw from Jerome Powell, the Fed chair, last week in Jackson Hole is it is all but certain. He basically said the most important 4 words that I've heard in a long time: the time has come.
All right. Jo Ling Kent, thank you so much.
Thanks.